Welcome back to Switzer on Australia's Business Channel. So for the ING view on the RBA decision and where interest rates might be going, we have the Treasurer of ING Direct, Michael Whitts, on the program. How are you, Michael?
Hi, Peter. How are you?
This is a great day for people like you and me. We can't wait for a Reserve Bank decision, can we?
Well, yes, but today was a bit boring.
Yeah?
They actually, month on month, they only changed 10 words in the statement.
And you actually counted. Only a person like you or me would do something like that, 10 words. And were those 10 words significant?
Not really, no. The underlying themes were exactly the same.
Okay.
There was fundamentally no difference. They've really got nothing to hang their hat on in terms of they're quite happy with where the economy is going. The flow-through effects, rather, of past interest rate cuts, they're very happy with that. They're perhaps less happy with the exchange rate. That's the big issue.
I just had a discussion with Tom. Tom was sort of saying that, well, it's in the hands of the Fed, but it seems to me if our Aus dollar starts rising again, that will at least make the Reserve Bank Board discuss whether they need to cut interest rates to bring the dollar down. What do you think, Michael?
I think the Reserve's trying to do a very difficult balancing act. They've got the housing market, certainly in Sydney and Melbourne, being very strong. Admittedly, it's patchy potentially in other cities, but generally it's still a very strong market.
Yeah.
Now, if the Reserve was to cut rates further, then you'd likely see further impetus to the housing market, and that's where the RBA is quite sort of, they're almost in a corner at the moment. They can't really afford to cut rates further again. What they're relying on now is talking the currency lower, and they've got to actually wait until the Federal Reserve starts to taper in that economy there and withdraw the stimulus.
I guess from their point of view is they would at least hope that the taper starts in March, and that wouldn't be a bad window for them, would it? Because they could cut in February if they're worried, but they might wait till March. But it would be mid-March, wouldn't it, before the Fed could move?
Well, I think the Fed potentially could move slightly earlier, but with the change of Fed governance, that will become an issue.
Yeah.
But I think also, more importantly, I think the Reserve Bank is going to struggle to justify cutting rates again.
Well, OK, so you must be saying then that the overall economic picture is looking pretty good. In the statement today, they did say previous cuts still have not worked their magic. That was my interpretation of what they said. So there's more stimulation in the system that really hasn't shown up. But they were worried. They said here that the Aus dollar is still uncomfortably high and a lower dollar is needed to achieve balanced growth. So I took that to mean that, well, if it keeps going up, we're going to have unbalanced growth, and wouldn't that worry them?
Well, it will worry them, but I think what will worry them even more is if they cut rates again, that will actually generate more unbalanced growth in a different area. And so what they're trying to do is get sort of more balanced growth across the economy as a whole. OK.
You come from an institution that has a lot to do with the housing sector. How excited is it? Like the RBA data numbers yesterday weren't over the top, were they?
In terms of price movements, no, they're starting to level off, and I think what you're starting to see is perhaps some buyer resistance to the higher prices, and perhaps sellers have perhaps gone too high, and a bit of reality is coming back into the market, and I think we'll see that over the next three to 6 months.
So we might end up with just like a housing recovery rather than a housing bubble.
Exactly. I think if you look at the longer-term run of housing prices over, say, a 7 or a 10-year period, there's been an extended period where the prices have moved very, very little. And yes, there's some catch-up going on at the moment, but I think we're coming to a stage where perhaps that catch-up is just about exhausted. And what we are seeing in terms of at ING Direct, we're seeing continued very, very good applications coming through, very good volumes coming through, and that is obviously reflective of past rate cuts.
Around the country, or is it still remaining in Sydney and Melbourne?
I think there is patches of it, yes, most definitely. And I think, like with any market generally, it's very hard to generalise across all of the country and say the whole market's strong. Certainly the capital cities are very good, but then when you move into the regional areas, they're perhaps less good.
Michael, sort of a question without notice, but I'm sure you've thought about it. I did a conference recently for Genworth, and John Simon was there and a number of other speakers, and they're all saying that a great thing that could happen to this country over the next 3 to 6 years would be to improve the infrastructure. So land further away from the CBD becomes more buyable because the infrastructure is so much better. People can live out there and still work in the city. This is a major issue around our housing, isn't it?
No, it's very, very true. And we were speaking to some offshore investors on that particular point about the dynamics of the housing market. And if you look, say, in Sydney, for example, we've got water to the east, mountains to the west, national parks to the north and south, and so there's actually a physical boundary to the size of Sydney. So if you want to get more people into that area, you've got to build the infrastructure such that they can get into the cities. The unfortunate reality is that most of the jobs are actually in the city.
Yeah, and so if the Abbott government actually achieves anything, if they really get a big commitment around infrastructure, improving roads, improving trains and things like that, that could actually contain any potential housing bubble.
I think the main thing is that with infrastructure, it is a very long-term proposition. Like you're talking about Badgerys Creek Airport, right? It's most probably 20 years away or whatever. Right? I know they've been talking about it for the last 30, but let's say it's 20 years into the future.
Yeah.
But yeah, they do have to take that into account. And it comes back also is that if the government is trying to spend money to stimulate the economy, it's much better to spend it on infrastructure. That way they can actually get a return on investment into the future.
Okay, let's look around the world now, because the world picture to me seems to be getting better. Got some data last week showing that private equity groups are starting to pick through Spain and Italy, which to me sounds like good news. The 2 notches up for Greek debt, which is still a long way from where it should be, but still it's up, not down.
Heading in the right direction.
Yeah. Now, what's your view on the international world for 2014 and even Australia 2014?
Okay. If you look sort of around the world, if you start out in the US, clearly the US is going very, very well at the moment, and so that's fine. The balancing act that the Fed needs to consider is how much do they withdraw versus the underlying economy, which most probably means, and the reason why they didn't taper in September, the risk to them is tapering too early. There's little risk in doing too late, exactly. Europe certainly has come through the worst of it, and some of the predictions around Europe have been shown to be too dire, and the European economies, certainly the northern economies, are going very well, and the southern economies are starting to come through as well. I think the dark horse is Japan. Japan has spent a hell of a lot of money and printed a hell of a lot of money to stimulate their economy, and that is going to come through, and I don't think the market is fully anticipating that. And that
so it's going to be a dark horse that will have a good result.
Possibly, yeah.
I do remember I was in Japan early this year, and because of that currency difference, I actually bought an Armani tie. Now, I won't even buy an Armani tie in this country. So that's how, and I thought that was a competitive sign that Japan was starting to sell stuff again.
No, and certainly, if the Japanese economy starts buying stuff again, that will underwrite the Australian economy, and certainly China and Asia generally is going quite positive.
So your Australian view is better than expected, considering the consensus view out there?
Yeah, I think so, and I think the GDP data tomorrow will actually sort of surprise on the high side.
Are you going 0.8 or even higher?
A little bit higher.
Well done, 0.9. I'll multiply that by 4 and get 3.6% growth. That's fantastic. All right, mate, thanks for joining us, Michael.
Okay,
have a good Christmas.
Same to you.
After break, we'll be joined by the chairman of the most important corporate regulator of the country. Don't miss it.